What's going on, people? It's GBP Baby. Welcome to episode 2 of the backtesting series. Today we're going to be focusing purely on London Killzone entries. I'm sure this will come as a great use to some people, and I'm just going to get straight into it. So I'm going to be using the week that's just passed. So I'm going to be starting on Tuesday, the 23rd of May. I'm not going to be starting on Monday because I don't trade Mondays, and I don't suggest people trade Mondays. So we're going to start from Tuesday. This is the midnight candle. This is the start of the London Killzone, 2 a.m. This is the end of the London Killzone, 5 a.m. This is the Asia range from 8 p.m. till midnight. And then this is all New York time, by the way. And we're going to look at entries that we could do within the London Killzone. So the first thing you want to do is when you come to 2 a.m. New York, which is about 7 a.m. in the UK, is you want to see what current trading range you're in. So I can see a swing high here and a swing low here. And so now I want to draw that out, and that will allow me to frame where I am. So we've got to pretend that all this hasn't happened yet, and we've recognized that we're in this range. We also need to look back into Asia and see what happened. So during Asia, you can see it traded higher. It took out relative equal highs. We then had a break in market structure. If you've watched my first backtesting video, you'll be used to seeing all this. We had a break in market structure. We traded higher, kissing goodbye the breaker. Traded lower, took out these relative equal lows. We then traded higher into and consolidated into the midnight candle, and then we broke lower before London. We broke lower aggressively too and went to these lows. So when we see this expansion here, also this relative equal high took out this swing high took out highs here, and we see a break in market structure which happened here. I'll type that out as break in market structure, break of structure. Break of structure, and we also have a break of structure here as well. I'll just copy that. So as you can see, we have a break in market structure, and then we've traded higher as London begins. Now you can see that this trading range, we trade above the 50% level, meaning that we're now entering into a premium, because as once we see this kind of move, taking out lows here taking out lows here after taking out buy side liquidity here, we can start looking at this as a potential draw for sell side. And then obviously on a higher time frame, we should be looking at these lows as well, but that's a much higher time frame, and I don't really want to be using that as context because I just want to keep it as simple as possible. So let's say this is what we're looking at. As we trade above this 50% level, we will then realize we're in a premium, so our entry would need to be anywhere above this 50% level of this range. So let's say we enter here on this candle. As we trade into also at the same time, we'd want to be selling, shorting, and you can see a fair value gap here on a 5-minute chart. On a 1 minute, it'll probably be even more clear. And our stop loss would get put above this swing high. Now, why should our stop loss go above that swing high? Because we've taken out sell side here, and here, and then we moved lower. So price shouldn't need to return back above here because the sell side liquidity has been grabbed, and now it's a matter of releasing it lower. So as we return back into this fair value gap and into this bearish order block, which should also be marked out as a target, we should be selling. Now it looks easy, obviously with hindsight, but what needs to be understood is that these are the things that you should be looking for during the London session before you make your entries. So I'm going to mark out the 50% because I already want to take down these lines. And remember, this 50% level is going to be the 50% of the current trading range we're in as London begins, which will be this low to this high. So that's the 50% level. So anything above here is premium, anything below here is discount. Let me premium, anything above, and then we need a discount as well. So once we trade above, we sell, and then we move lower. We then see price return back to this level. This kind of consolidation here, this is what you've got to get. This is just what practice is going to help do. There's no really easy way to sit through drawdown, so to speak. Because let's say we entered here and we watched price trade up here, but times like that, you just have to keep your bias in mind and allow your stop loss to be a stop loss, meaning that if you place your stop loss here, leave your stop loss there, because price shouldn't go above there, and if it does, then you're simply wrong and you move on. So let's say we do enter here, and then let's say we stack onto our price here as well. That means we're in two positions, and then as price moves lower, we had our eyes on this south side liquidity. But let's say we also knew about this resting liquidity down here, which is on the longer term. That means that as we reach here, we can let go of some of our stops. We see consolidation, it finds support above this, so we trade through it, then through it again, resistance, through it again, resistance, 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 and then we leave. And we eventually take out this low, and that's where we'd let off the rest of our position. Now, we do move lower, but that would be more than enough of a significant move during London session for us to get in on a good position. So I'm going to set up the next example, which will be Tuesday 24th of May, and I'll be right back with you. So Wednesday actually had a news release, a big news release. It was inflation rates. So that means that, and it was at 2 a.m, which is the start of the London session. So whenever there's a big impact news release such as that, it's best to stay out of the market for another hour. So what I'm going to do is I'm going to move our start of the London session to 3 a.m. instead of 2 a.m. And again, that's because we had the news release. So purely for safety's sake, it's best to stay out the markets completely and then just push it an hour forward, and then after that hour, trade as you wish. So you can see if we'd done that, we would have waited for 3 a.m. to come around, and then we have a break in market structure here. We have this swing low get taken, and we have this swing low get taken. As soon as we closed here, we should know that price should now not trade above this candle's high. So we know our stop loss can be put here, and we'd have to wait. Obviously, we'd have to wait for this candle to be formed. So at this point, after we've broken structure here and here, it's best to wait for to see if a fair value gap gets created, which we see here, and that would be our entry there. Also, if we look at the range, which would be this high to this low, is it above the 50% level? Yes, making it a perfect entry. We could put a limit buy here, a limit sell here, and our stop loss above there. So I'm going to put our arrows in. Like so. And then our stop loss would be hypothetically here. And then obviously we can see that we have southside liquidity resting below the Asian session, so that could be an exit here. And then obviously if we were a lot more confident with our trading, or like looked at more of a longer term bias, there was also an exit made at this swing low created on the Tuesday. So these are both potential targets for our position. You can see our price runs down there, and then we get a big retracement, and it continues to break lower. Now, if we were to look at the entire day completely, then it would be feasible to argue that we would be aware that we're likely going to run into these lows that rested here. But like I said, I want to try and keep this video as simple as possible, so we're just going to look at these two, and you can see our price trades, retraces, trades, and retraces. So on the Thursday, you can see it was very manipulative. On the 5-minute chart, there's no entries available, as you can see, and it's very manipulative because you can see we expanded higher, which could trick us into thinking, okay, we're expanding higher, meaning that we're likely looking for buy side. And then you can see it turns around and takes out all these lows and trades right very deep into this bullish order block here. So although it's manipulative, we could argue that because there was no trade available on the 5 minute and I've only been using the 5 minutes to trade, then I shouldn't be entering any trades in this condition anyway. And you can see all amongst here, there's no entries to trade. If we drop down to the 1 minute, which we could, I'm sure we could find something. However, I tend to like to keep my 5 minute as the minimum. So let's just say that we watched this whole session go by, nothing came, and then luckily we didn't enter a trade. And then in that circumstance, if I still wanted to trade today, which I probably wouldn't, I'd likely wait for the New York session, which starts at 7 a.m. and that's where I'd start looking for my entry. But we're focused on London sessions right now, and this would have just been a circumstance where I wouldn't have entered a trade. Let's go to Friday. We'll mark, and then we can see how as soon as London starts, we have an expansion upwards. We should be looking at longer term potential reaches for liquidity, such as this swing high made here. Especially after having a long down week as well, this is more reason as to why it's likely that price would want to march up there. And then we want to start looking for potential entries. So we can see this order block was made on the 2 o'clock candle, and then we move higher. After the expansion is when we want to start looking for entries. Here we have a fair value gap, and we also have a fair value gap here. But remember, we want to be we want to be buying at a discount. If we're buying, we want to be buying at a discount. If we're selling, we want to be selling at a premium. So we look at the total range that we're in after we have this break, and then we mark out any PDRA resting below the 50% level and withholds a fair value gap with a bullish order block and a bullish bias. So then we'd want to enter there. Make it blue. And then in terms of targets to release, and let's say we wanted to release by the end of, we could obviously put stops up here, but we need to look at the complete range that we're currently in, and that will also give us places where we can let go of our positions. So let's look at the total range, and we've bought in a discount, remember, and we've bought in a discount of this entire range. So we want to let go of our stops anywhere above the 50% level of the current trading range. Let me explain that again. This is the bigger range that we're currently trading in. We've bought in a discount within a discount, which means below the 50% level. So now we're looking to release our stops anywhere above the 50% level. And stops should be released above relative equal highs, because that's where liquidity rests. So this high, and if you're brave enough to hold past London, this high, and obviously that high. So these are all places we could be releasing our positions. And in terms of stop loss should be positioned, as ICT says, on the low of the candle which you're trading in. So we could put it here, which is a fair place. Another reason that's a fair place is because it's below 50% of this bullish order block. So if price is bullish, it shouldn't trade past the 50% level of an order block, which is what you call mean threshold. You can see that this literally trades to it and then leaves it. So anything below this you wouldn't want to see price do. So this makes this a safe stop loss. Also below here would be fine as well, both of which will give you no drawdown whatsoever, so it's just perfect entry. That brings us to the end. That was literally just this week's price action. I just showed you 3 examples of where you could have entered during London and got out during London. So 3 out of 5 days, that's a significant, trading plan. But any questions, just leave it in the comments, and I'll catch you in the next one. Peace.